Good morning and welcome. I'm Kenny Polcaro, your host, and today I'm live from the Palm Beaches. So what is today? Today is Tuesday, June 28th, 2022, and here are the things that you need to know to get your day started and what the stocks and the market are going to do. So stocks stalled yesterday, right? No carry through from last week's rally. Yields are up, oil's up, China eases up, rates go up, and inflation is up. The recession, not if, but when. The end of the quarter action should see stocks rise just a bit as we go into Thursday, and earnings season is only 2 weeks away. And what are we having for dinner tonight? We're going to have the stuffed zucchini flowers, which is a summer delicacy. So look, there was no carry through to the stock rally that began last week as investors and traders and portfolio managers remained confused over what is next. By the end of the day yesterday, the Dow gave up 65 points, the S&P lost 12, the NASDAQ gave up 83 points, and the transports gave back 35. The Russell, the only one in positive territory, gained 6 points, which is a little bit interesting. Eco data last week was weaker than expected, and that was what some were saying was the reason that the rally even began, versus just being in a short-term oversold condition. Then yesterday's eco data had both an upside surprise and a downside surprise. Durable goods stronger than expected, and capital goods ordered and shipped also stronger than expected, while pending home sales month over month were up small, but year over year sales were down big, falling 12%, while the Dallas Fed survey also fell much more than expected at negative 17.7 versus the expected negative 0.5. This left everyone thinking, what am I to do now? So stocks slipped in what could be described as a slow day, as investors remained in a holding pattern as the quarter comes to an end. The dog days of summer are now upon us, right? Schools are out, kids are going to camp, and families are prepping for their summer vacation. So it will be, as we move into July and August, the dog days of summer. The 4th of July weekend is here. Earnings are going to begin in 2 weeks, and then it starts all over again. What will companies reveal? What will they say about profit margins and pressures on their businesses? In the middle of all this, there's going to be another round of macro data points that is only going to serve to fill in the blanks, right? Causing many to ask, what will guidance look like then, and what will be the speculation around what the Fed is going to say and do at the end of the month when the next FOMC, the Federal Open Market Committee, meets. Now, that meeting takes place on July 26th and 27th, so it's just about 1 month away from today. The wage price inflation spiral has now begun, and this is what I talked about months ago. Word that United Airlines approved a pilot's contract that will see a 14% pay raise over 18 months. Now, yesterday I erroneously said it was 36 months, so I'm now correcting myself. And this sets the stage for similar hikes throughout the industry, because if you think that American and Delta and JetBlue pilots are going to stand by and say, oh, wow, that's great for United, you better think again. They're going to join this chorus and demand the same, if not more, for them to remain in the pilot seat. And this is how it begins. The wage price spiral, reminiscent of the late 1970s and 80s. And it will only exacerbate the inflation story. Because what the pilots are saying, and soon a lot of others, is we cannot afford to come to work at the current wage rates because inflation is robbing us of our earnings. So cough it up and let's go, especially when they report earnings that are better than expected. Watch what happens then. United has now set the bar. Do not expect the others to negotiate a better deal. They drew the line in the sand, and it's at least 14%. And for the airlines to offer these pay raises, what do they have to do? Right, they got to raise the price at the pump, which is a very good analogy at the moment, considering what gas prices are doing, just going up every day. And then, do you think that the flight attendants are just going to stand by without putting up a fight? Especially now that so many of them feel threatened by the bad traveler behavior. They're going to see combat duty pay on top of the 14% pay raise. And then think about all the bag handlers, right? You know, the guys that work outside in the rain and the snow and the ice and the heat, just like the postman. And wait until the federal employees start screaming about not being able to feed their families. What do you think is going to happen then? And this is only the beginning. So this whole idea that inflation is peaking, get it out of your head right now. we've only just begun, and that reminds me of a song, right? White Lace and Promises, a kiss for luck, and you're on your way. Circa the Carpenter, circa August 1970. You can go to YouTube and catch it. It's always such a great video to watch. It brings you back to being a kid, or at least it brings our generation back to being a kid. 1970, I was 10 years old, and this increase in wage demand is going to start to permeate other industries as well. So strap it in and welcome to 1979. I wish it was. I was 18. I had dark brown hair, a full bushy mustache, and curls going down the back of my neck. Just graduating from high school. Oh my God, think of that. In any event, now, why the back and forth? Because every good piece of economic news is bad for the market. Why? Because strong growth will continue to feed the inflation monster. And that then will force every central bank to hike rates, forcing us into an inevitable recession. And if we're not already there, some people think we're already there, others think, we're on the edge, and there are still others that think we're nowhere near it. So my good friend now, or my new friend now, Brian Westbury, chief economist at First Trust Advisors, is on the other side of this argument, right? And he makes a great argument. He says we're not in a recession, or at least not yet. He points out that in the first 5 months of this year, manufacturing production is up at a 6.6% annual rate. Non-farm payrolls are up an average monthly pace of 488,000. The unemployment rate has dropped from 3.9 to 3.6%, and April revealed that real inflation-adjusted consumer spending and personal income were at record highs. He also points out that gross domestic income, GDI, an alternative measure of economic output, rose at a 2.1% annual rate in the first quarter versus the negative print of 1.5% for GDP in the first quarter. The public pays very little attention to the GDI because the government usually takes an additional month to report this data after GDP is initially released. But over time, the GDI is just as accurate as the GDP in describing the performance of the economy, Westbury tells us. And that measure is not screaming recession yet, no matter how painful it feels right now, right? Think of surging energy, surging food, and the cost of housing, everything that matters most to Americans. He goes on to reason that a recession is about real economic pain, not an academic style of semantics that tries to make the data fit some technical definition, especially since we're in the middle of midterm elections, right? That now they're only 4 months away. Because if they succeed in convincing the public that the recession has begun, it usually hurts the party in control, causing upheaval on the Hill and in the White House. I mean, we see this every 2 years, right? Every president suffers this as the minority party tries to regain control. And this year, the stakes are very high as the heat in the kitchen is reaching the boiling point. What I find interesting is that he's expecting the recession not to begin until late 2023 or early 2024. And it's not going to look like the 70s style inflation or even 2008, 2009 or 2020. His analysis suggests it's going to be more like 1990-91. And to that I say, Brian, I love you, man, but good luck with that. My analysis, or better yet, my gut, which is what I always go by, tells me that while he says it's not true, reality says that the public does not see it that way, nor do many asset managers. Thus, the collapse in the indexes and stock prices. And so the volatility continues and will continue until we get even more clarity on how this is going to change, how this change in monetary policy is working. The key here is that whenever the recession does officially come, that will be the time to back up the truck. Why? Because that's going to be the time that the Fed starts the stimulus process all over again. And therefore, you know what'll happen, just like it did in 82. Rates come down, stocks will go up. Look, inflation is running at 8.6%. It's running at 8+% across Europe and 9% in the UK. US rates are only at 1.75%, while European rates are just south of zero in negative territory. This after a dozen years of stimulus and support. Inflation is not just going to slow down on its own. It needs to be arrested, and that can't happen until they kill demand. Because the Fed and the ECB cannot control the supply chain part of this equation, nor can they control Putin, all the reasons that the Democrats hold responsible for this out-of-control situation. So whatever you believe, you believe. but the market is telling you what the story is. And right now, it is continued uncertainty, and that will lead to continued volatility and downside pressures because what the market cannot deal with is uncertainty. Now, it does not mean that you jump out the window and light your hair on fire. It just means you need to understand the environment and plan accordingly. There are opportunities in this mess. There are places to put your investment dollars that offer stability, safety, income, and growth. Think the more traditional, big, boring names, right? The mega caps that have multinational exposure that offer dividend growth and long-term revenue histories. Also think about current energy policy and the opportunities that this creates because while we all want to go green, we're just not there yet and most likely won't be there for 2 or 3 decades. But during this time, there will be opportunities that present themselves, and there already are, right? We're seeing it in coal. Coal use has exploded and has continued to explode. Think cybersecurity. Think aerospace and defense, considering this world we're going into. Think artificial intelligence, consumer staples, financials, and industrials. Think healthcare. Think about who you are and what your risk profile is, and more importantly, what's your time frame, because time plays a significant role in your decision process. And I'm happy to talk to you about that. This morning, we are seeing U.S. futures rally just as we saw yesterday morning in the pre-market, right? Early this morning, I was up early writing this note, so at about, 4:30 or 5 o'clock this morning, Dow futures are up 130 points, the S&Ps are up 15, the NASDAQ up 50, and the Russell's up 12. Trading for the next 3 days is going to remain erratic and at times unexplainable as the month and quarter comes to an end and portfolio managers rebalance their portfolios and investors reallocate investment dollars, right? And it makes sense as everyone prepares for the quarter end marking period. Eco data today includes retail inventories, which are expected to be up 1.6%, which would suggest that either consumers are not buying the stuff that's on the shelves or the supply chain issues are receding. And the way they tell that story is going to be very interesting because that's what they're going to want you to believe. Consumer confidence of 100, though, is going to represent a 6-point decline month over month. And finally, the Richmond Fed survey, which is also expected to be -5. Remember that Thursday brings us the latest PCE report, which is the Fed's favorite inflation gauge. And this will be important as it is expected to go up by 6.4%, which is an increase over last month. European markets have now been open for 2 or 3 hours, and they're all up as well, between 0.75% and 1.5%. The story is the same. Runaway inflation, rising rates, the end of the quarter, window dressing, news that China has eased up on its very strict COVID protocols is helping to send mining and energy stocks higher, right? Think demand. The People's Bank of China has pledged to keep monetary policy supportive. And that is helping stocks in the region advance, which is helping European shares advance as the European Sino trade data would be expected to improve. And so therefore that would be bullish. 10-year Treasury yields were up yesterday, and they're up again this morning. They're currently yielding 3.25%. Now remember, last week they dropped to 3.1. They're back up to 3.25 and going higher. And oil, which was under pressure for the past 2 weeks, trading down to as low as $101 a barrel before finding support, has rebounded nicely and is now trading up 1.2% at $111 a barrel. The latest Chinese news, easing of the COVID restrictions, is what is helping to push oil higher today. Talk of price caps on Russian oil at the G7 meeting do not appear to be gaining traction, although it's all over the news that that's what they're trying to impose. The S&P closed at 3,900, right on the nose, as stocks continue to ricochet around and investors try to decipher what's next. It is the end of the month and the quarter, so expect lots of action. I remain in the camp that says we cannot avoid a hard landing, and so I remain cautious as we move into the third quarter. I suspect as earnings season begins and estimates start to come down, the market's going to be forced to reprice and retest S&P 3,600. That should not be ruled out. But look, I hope I'm wrong. But in any event, what are we having for dinner? So this isn't really a meal, but this is a side dish or it's an appetizer. And it's stuffed zucchini flowers. And if you've been to an Italian restaurant lately, you're going to see it on the menu because it's only available certain times of the year. And this is the time of the year, right? Because we only have these for a short period of time. So if you see them on the menu, you should order them because if they're done right, they are really, really great. And it's a great, I call it a delicacy because because you can't get it year round, right? So on their own, zucchini flowers don't really taste like anything, but they're perfect for stuffing. And it is the stuffing and maybe the tomato sauce or some of the sauce that you use on the side that give it, all of its flavor. So for this, you need fresh picked zucchini flowers, and you can find those at an Italian market or a specialty grocery. For the stuffing, you're going to need a half a cup of ricotta cheese. You need grated Romano cheese, shredded much. You need 1 egg that's beaten, and you need some salt and pepper. For the batter, you need 2 eggs, which you've beaten, a 1/4 cup of whole milk, a 1/4 cup of flour, a 1/4 cup of grated Romano cheese, and some chopped basil, and then you want cheese on the side at the end, and we'll get to that in a second. Okay, so now you want to clean the zucchini flower and carefully remove the stamen, right? Don't take the stem off, as you need it to grasp when you pick it up to eat it or you dip it. The stamen is the pollen in the middle, right? Is that thing in the middle, the reproductive organ of the flower. And while the stem is the stem. So you want to hold the stem, right? Take the stamen off and hold the stem. Now, you want to mix the stuffing ingredients in a bowl and then put it like in a Ziploc bag and just snip one corner of the Ziploc bag so you make like a pastry bag out of it, right? So mix all those ingredients, put it in the Ziploc bag. Now, pick up the flour, open the flour just a little bit, but be careful not to ruin the leaves, and then put the corner of the bag into the flour and gently squeeze an amount of the mixture into the blossom. Do not overstuff it. Then gently twist the tower top to close the end and place it in the fridge for 20 minutes. Now, make the batter. You scramble the eggs, you add the milk, the flour, the cheese, and the basil. Mix it all well. It should be thick like a pancake batter. If it's too thin, it's not going to adhere to the flour. Now, take the flowers out of the fridge after about 20 minutes. Add some olive oil to a large frying pan that will accommodate, 3 or 4 of the flower blossoms. And then heat that up. You don't want to overcrowd them, right? Now you want to take the flour, you want to dredge it in that batter, and then place it in the hot pan, right, in the hot oil. Don't overcrowd them, and then you'll hear it right away. If the oil's nice and hot, you'll hear them start to sizzle, right? You want to fry them golden brown on each side. It's like 2 minutes, and that's it. 2 minutes on one side, 2 minutes on the other side. Take it out, remove, and place it on a plate that's lined with a paper towel, because this will help drain some of the excess oil that's on the flour. Now, using a beautiful white platter, cover it with some arugula, which is nice and green, right? A robust green. And then place the flowers on top of the arugula. Sprinkle a bit more of the Romano cheese on top while they're still warm, because it's all in the presentation, right? You need to please the eye to please the palate. In any event, it is an absolutely spectacular day in South Florida. Look at that sky. Could it be any more spectacular than that? And the weather right now, it's about 80 degrees, surely to go up to 90. But you know what? It is South Florida, and it is the summertime. Until tomorrow, take good care.